How are you all? This is CA Rohit Grover, your faculty for CA Final Auditing Advanced Auditing and Professional Ethics paper. So finally, we are on a very important chapter now. So the name of the chapter, as you can see, it is there in front of you. The name of the chapter is known as Audit Committee and Corporate Governance. What is the name of the chapter? Audit Committee and Corporate Governance. So let me give you the introduction. Let me give you the introduction of this particular chapter now. How we are going to proceed in this chapter, what is the weightage of this chapter, and how this chapter is so much important from your examination point of view, right? Now, let us understand what audit committee and corporate governance is all about, right? Now, first of all, we have to understand the name of the chapter first, right or not? So what is the name of the chapter? You can see that the name of the chapter is known as Audit Committee. The name of the chapter is known as Audit Committee. What is the name of the chapter? Audit Committee and Corporate Governance. So before jumping into this chapter, before understanding this chapter, first we have to understand the framework of this chapter. Are you getting the point? We have to understand the framework of this chapter, how we are going to proceed in this particular chapter. Remember one thing, you all know that ICAI has recently introduced the May 20 onwards study material for all of you. What my suggestion is, these three chapters, what are the three chapters? Company audit chapter, which we have already covered, company audit concepts, all the company audits, professional ethics concepts, and the this thing called audit committee and corporate governance concept. These three chapters are highly important, which you have to do it from the ICAI material only. So what I did is I also incorporated the whole ICAI material in our study material, which I am providing you when you are purchasing the classes, right? Now, especially in these three chapters, there are so many other chapters also where we'll be reading out from the material and we'll be doing it. Rather, you already know that in most of the chapters, what I do is I tell you the concept via my handwritten notes. I tell you the whole concept, each and every provision of the concept via my handwritten notes, right? Now, how we are going to proceed in this particular chapter? We have to understand provisions, what the ICAI material and what the SEBI regulations are telling. Are you getting the point? What are the provisions written in the ICAI material and what are the amendments in the SEBI LODR regulations? So that first we have to understand. So let me give you the structure first, how we are going to proceed with this particular chapter called Audit Committee and Corporate Governance. Now listen to this very carefully. First of all, our very one lecture, minimum one lecture or 1.5 lecture must be dedicated in understanding the concept of what? In understanding the concept of what? Audit committee. Are you getting the point or not? Minimum 1.5 lecture we have to dedicate to understand the concept of what? Audit committee. Now let me give you the broader idea. Why this chapter is very important. Now see, there are two things happened in this chapter. First of all, in ICAI material, first of all, in ICAI material only, so many amendments were there. In ICAI material only, so many amendments were there. When the May 19 onwards material got turned into the May 2020 onwards material, there are so many amendments were incorporated by the ICAI that by the time we'll do the chapter, you all will come to know. So many ICAI amendments are there. Second thing is the RTP. Second thing is what? The RTP which came in November 19. The RTP which came in November 19 and the RTP which came in May 20. There also so many amendments came. So in this chapter called Audit Committee and Corporate Governance, we have to understand two types of amendments. How many types of amendments? Two types of amendments. One are the amendments which were incorporated in our study material already, and one are the amendments which were incorporated by revisionary test papers later on via November 19 RTP and via May 20 RTP, right? That makes this chapter a very important. And let me tell you one thing, this chapter is huge as well. It's a very vast chapter. But the beauty of this chapter is we are going to learn each and everything about the listed entities. About the which entities? listed entities, those which are listed companies. This chapter is basically completely dedicated to the listed entities. Are you getting the point? So the name of the chapter is Audit Committee and Corporate Governance. So let me give you the brief what Audit Committee is all about. Then we'll understand the Audit Committee in detail, and then I'll give you the chapter overview also. What do you mean by Audit Committee? First of all, try to understand what do you mean by the term called Audit Committee. Now Audit Committee का मतलब क्या है? Audit Committee is basically an independent committee. It is basically a which committee? It is an independent committee. Sir, what do you mean by independent committee? If I have to tell you in one word, all the functions, all the roles, all the powers, all the duties, mostly all the functions, powers, duties, roles and responsibilities of the board of directors, of the management of the company have been taken from the hands of the management, and put it in the hands of what? Which committee? Audit Committee. This was the most revolutionary step which was taken by the Companies Act 2013 and the SEBI Act 1992. Yes, you have heard me very correct. When we'll do the audit committee, we will do the audit committee of two types. What are the audit committees we have to do? We have to do the audit committee of two types. First audit committee is the audit committee which is defined as per Companies Act, Companies Act, as per Companies Act 2013. And the second kind of audit committee which we have to understand is as per the SEBI Act 1992. Basically, in the SEBI, we are going to understand LODR regulations. We are going to understand which regulations? LODR regulations. Sir, what do you mean by LODR regulations? It is known as listing obligations and disclosure requirements. This is what the full form of LODR. So what is the full form of LODR? LODR stands for listing obligations and disclosure requirements, right? So what is LODR? LODR stands for listing obligations and disclosure requirements. So let me just give you the introduction about the LODR first. Now, if you all remember, or I don't know whether you know or not, there used to be earlier one thing called clause 49 listing agreements. There used to be one thing called clause 49 listing agreements. Are you getting the point? So basically, what do you mean by listing agreements? Once you turn yourself from an unlisted company to a listed company, now SEBI Act 1992 says that there are some clause 49 listing agreements which you have to comply with. Means what? Your board of directors should have that many independent directors. You should disclose the related parties. You should have an audit committee. You should have a risk management committee. This should be the composition of the women directors. This should be the composition of executive directors, non-executive directors. So once you become a listed company, on you Companies Act does not work. On you SEBI Act governs you. Are you getting the word? What governs you? The SEBI Act 1992 governs you. So under the SEBI Act, the LODR regulations is a highly important topic which has been present now. Now, what is LODR basically? LODR has recently replaced the clause 49 listing agreements. Before LODR, we used to call it as a clause 49 listing agreements. Are you getting the point? We used to call it as what? Clause 49 listing agreements. Now clause 49 listing agreements were recently replaced by what? LODR regulations, which is now known as listing obligations and disclosure requirements. If you are a listed company, you have some obligations and you have some disclosure requirements relating to your subsidiaries, relating to your committees, relating to your composition of board, relating to the remuneration, relating to the functionality, relating to so many other things. That is why that makes this chapter a very huge thing. So in totality, what I'm trying to tell that we are going to understand two types of audit committee in this particular chapter. One is the audit committee which we already know in our intermediate subject of audit in our IPCC level under section 177, which we have already done under the IPCC and intermediate level, ki what audit committee is all about as per Companies Act. So that audit committee we have already known, but still we have to do it again here. And we are also going to understand the meaning of the audit committee as per SEBI Act 1992 LODR regulations. So that is what the main picture of this chapter. That's why I told you this chapter is basically divided into two parts. Now, what are the two parts? In the one part, we are going to talk about which committee? Audit committee. But in the other part, we are going to talk about what? Corporate governance. So in the one part, we'll talk about the audit committee. In the another part, we'll talk about the corporate governance. Audit committee itself is a very huge topic. There are so many regulations which you have to understand in the audit committee. And corporate governance means other than audit committee, what are the other obligations of the listed entities, like how many independent directors in the board of directors, what is should be the remuneration paid to the executive directors, non-executive directors. So that is called corporate governance. Now, let us first understand what audit committee is all about. I already gave you an idea. Audit committee is basically what? All the powers of board of directors, which board of directors used to enjoy, all those powers have now been shifted in the hands of whom? Audit committee. Now it is the audit committee only which will review the interim financial statements and final financial statements. It is the audit committee only which will check the adequacy of internal control systems of an entity. It is the audit committee only which will always keep on monitoring the end use of the borrowings. Are you getting the point? So what board of directors used to do earlier, all the powers of the board of directors have now been shifted in the hands of which committee? Audit committee. So audit committee are of two types. What are the two types of audit committee? One is the audit committee which we are going to do as per Companies Act, and one is the audit committee which we are going to do as per the SEBI Act. So many regulations relating to audit committee. Will understand what is the difference between an audit committee under the Companies Act and an audit committee under the SEBI Act. So obviously, if you are a listed company, you are going to follow the rules and regulations relating to SEBI Act 1992. Actually, if I'll tell you, LODR regulations is an ocean. Out of those ocean size of regulations, some few picked and important regulations which the auditor should have the knowledge of if you are going to be an auditor of an listed entity in future, that we are going to understand in this particular chapter. As a listed company, what are the things in your organization should be taking place? That is why it is known as LODR, listing obligation and disclosure requirements. Second thing which I want to tell, the second part of the chapter talks about what? Second part of the chapter talks about what? Corporate governance. So what is the name of the second part of the chapter? Second part of the chapter talks about what? Corporate governance. Now, so many of us do not have an idea what do you mean by corporate governance. Corporate governance, in simple word, if I have to tell you, corporate means what? Companies. Corporate governance means what? If you are a company, you should behave in a responsible way. If you are a company, you should behave in a responsible way. What do you mean by responsible way? With the help of laws and compliances which are applicable on you. With the help of what? Laws and compliances which are applicable to you. So as a listed company, SEBI expects that you as a listed company should behave in a responsible way. Whatever is written in the LODR regulations, whatever is written in the which regulations? LODR regulations must be complied by the listed entity. Must be complied by the which entity? Listed entity. So what the SEBI expects that being a listed company, you should follow these laws and regulations which I have written under the LODR, listing obligations and disclosure requirements. Meet the requirements, disclose these requirements as per the requirement of the SEBI Act 1992. I am happy, but behave in a responsible way because public money is invested. Transparency. So basically, in other words, corporate governance is known as what? Corporate governance is known as fatal. What do you mean by corporate governance? It is known as fatal. So what does SEBI expects from its listed company? SEBI expects from its listed companies to be fair, to show the fairness. Are you getting the point? To show the accountability, to show the integrity, to show the reliability, to show the transparency, to show ethical conduct, and to show the compliance of laws and regulations. Are you getting the point or not? This is what the definition of fatal, and fatal is nothing but called what? Corporate governance. So basically via corporate governance regulations, what the SEBI is trying to tell you that कि भैया कि if you are a listed company, be fair in your dealings. Be responsible for what you are doing. Be honest and sincere company as a listed company, because hell lot of public money is involved. Be reliable. Be reliable. Show some reliability. Prepare your books of accounts in a reliable manner. Have a transparency. Show everything to the shareholders. Disclose so many requirements to the shareholders and to the public and to the users of financial statement, or whatever you call it as a stakeholders of the organization. Everyone should know what is happening in the company. So you should be an open book. That is what the SEBI wants from a listed entity. So for making the listed company an open book, SEBI has introduced so many corporate governances. So what do you mean by governance? Governance means rules and regulations. What do you mean by corporate? Corporate means company. So company has to follow some rules and regulations. That is what we mean by the term called corporate governance. And when you will follow these rules and regulations, you will be in a position to behave in a very responsible way. Are you getting the point? This is what the basically the chapter is divided into. And SEBI also expects you to show the ethical conduct. Show some code of ethics. As a listed company, you have to be ethical in the public view, so that your brand image, your goodwill should not be damaged. And as a listed company, you have to ensure that all the laws and regulations which are applicable on you must be complied with. I hope all of you understood what we are going to do. So basically, this chapter is divided into two broad topics. What is the name of the chapter? First of all, the name of the chapter is known as Audit Committee and what? Corporate Governance. What is the name of the chapter? Audit Committee and Corporate Governance. So what is Audit Committee? Audit Committee are of two types, one under the Companies Act and one under the SEBI Act. That we'll learn. It's a very huge topic. So maybe one and a half class will be dedicated only on Audit Committee, and then we'll be having approximately 2 to 3 lectures on corporate governance. So many provisions are there. And let me tell you one thing. For the examiner, it is very important chapter, and it should be very important chapter from your point of view as well, because it is having a weightage of 8 to 10 marks in the examination. A single chapter is having a weightage of 8 to 10 marks. So no doubt and no shock if you will get some MCQs also, plus if you will get any subjective or descriptive question from this particular topic called Audit Committee. I hope all of you are understanding what I'm trying to tell. Are you getting the point or not? Why it is MCQ favorite chapter? Because there are so many small provisions. So that's why now we are going to use a different format. We are going to read from the material. You can see that we are going to read from the material which has been prepared as per the ICAI material, ICAI study material. And along with that, once we will be done with one particular topic, we will prepare our class notes on the other side. So on one side, we are going to have a discussion on the material, and on the other side, we are going to prepare what? Class notes like this, so that you will get a benefit of both in the single video only. I hope all of you understood the criteria of doing this particular chapter. Now, let us have some introduction to what we are basically going to understand in this particular chapter. First of all, we will understand the legal framework of this chapter. What we'll understand? We'll understand the legal framework of the chapter. Sir, what do you mean by legal framework of the chapter? We'll understand what this chapter is basically including. It includes LODR regulations. LODR regulations. On which entities? On the listed entities. Which listed entities? Whose securities are listed either in the stock exchanges, or they have the listed mutual funds, or they have the listed depository receipts. So all those points we'll understand. So it will give us an idea what is basically the legal framework of this particular chapter. Right? After that, there will be a huge discussion which is going to take place on one topic called what? Audit Committee. Audit Committee as per Companies Act, and audit committee as per which act? SEBI Act. This is what we are going to learn. Then we'll understand about everything about the board of directors. What should be the constitution of board of directors? Who will constitute the board of directors? How many should be women director? How many should be executive director? How many should be non-executive director? In how many companies you can become the board of directors? In which company? In how many companies you can become a chairman of the committee? All those things related. What should be your remuneration as a board of director? So in this topic, we'll understand everything about the compliances, rules and regulations and corporate governance of the listed company in relation to its board of directors. So it is the audit committee and the board of directors topic. It is the audit committee and board of directors topic where we are going to have a huge discussion on the differences between Companies Act regulation and SEBI Act regulation. What Companies Act is saying and what SEBI Act is saying. After that, we'll understand some provisions relating to code of conduct. After that, we'll understand what are the listed companies requirements in relation to related party transaction, how they have to disclose, how they have to identify, where they have to disclose, in which manner they have to disclose, within how much time period they have to disclose. Then we'll have a little bit discussion on a vigil mechanism, very small topic, that is nothing but called whistleblowers policy. It is also known as whistleblower policy. I hope you already have understood this concept while doing the section number 177 Companies Act in your intermediate IPCC level. Then we'll have a discussion on subsidiary of a listed entity. We have a discussion on what? Subsidiary of a listed company. We'll understand here कि as a subsidiary of a listed company, what are the requirements of the holding parent company and whether this subsidiary is a material subsidiary or immaterial subsidiary. If it is a material unlisted subsidiary, what are the regulations? And if it is immaterial subsidiary, what are the regulations? Then we'll understand statement of deviations or variations. Now, sometimes what will happen, as a listed company, you issue a prospectus. You generate the lot of funds from the public. You raise the lot of capital from the public. But at the end of the day, if you deviate from the purpose for which you have raised the money, if you have changed the purpose or if you have utilized the money for the purpose other than for which you have raised the money, then in that case, that is called statement of deviation. Let me give you an example. Say, for example, via prospectus, I as a company, listed company, raised 10,000 crore rupees. I told that I will open 10 new factories in the backward parts of the country so that I can generate the employment and all. But what I'm doing, I'm using that 10,000 crore rupees for my personal purpose. Off the track you are using. So are you deviating from the objectives for which you have raised the money or not? Yes. So as a listed company, you also have to give the statement of deviations and variations. Next point, as a listed company, you also have to give the disclosure of management discussion and analysis report. It is called management discussion and analysis report. Here we'll give the so many information of our internal control system. We will give the information of our interfirm intrafirm comparisons. We'll give the information about some significant accounting ratios, ratio analysis we are going to basically discuss in that part. Then information to the shareholders, whether the shareholders should know about the board of directors of the company or not. In the board of directors, who is drawing how much of salary, what are their qualifications of the board of directors, what are the past experience of the board of directors. Each and every director's information we have to provide it to whom? Shareholder. That we are going to understand here. Let me tell you one thing, most of the people leave this chapter in choice because they are unable to handle so many provisions in this chapter. But I can guarantee you, I make this particular chapter very simple for you. You will not find even a single rupee difficulty in understanding the whole chapter. Clear, everyone? Then we have stakeholders relationship committee. Various committees what the listed companies have to make. Stakeholders relationship committee is that committee where they will take care of the complaints given by the shareholders in relation to listed company. If they are unhappy with the functioning of the listed company, they can direct right away make the complaint to whom? To this committee. Then we'll understand transfer and transmission or transposition of the securities. How many shares have been transferred, how many shares have been transmitted. About that report also we have to talk about. Compliance certificate, then we have to also talk about the auditor's compliance certificate in relation to corporate governance. Remember one thing, every listed company must obtain one compliance certificate from the auditor, where the auditor is going to declare, statutory auditor is going to declare, yes, I say that the company has followed the various rules and regulations of LODR as per the corporate governance rule. Yes. Next one, we'll understand some disclosures. We'll understand some risk management committee. What is this risk management committee? Which will try to mitigate the future risk to the lowest acceptable level. We know that future is uncertain, and wherever there is an uncertainty, there are risks in the organization. So, are we going to keep the risk as it is, or we will try to reduce it? We all know that risk is something which cannot be eliminated, but at least it can be reduced. So, that is the function of risk management committee. Nomination and remuneration committee. Sir, what do you mean by nomination and remuneration committee? Nomination and remuneration committee is a committee which is going to nominate some directors from the directorship to the senior management. It will also demote you from the senior management to the directors if you're not performing well. So basically, it is checking your performance, by which they will nominate you from one level to another level, or it is the same committee which will determine your remuneration. Are you getting the point or not? So that is why it is known as nomination and remuneration committee. Then we have finally a report on corporate governance, which is required to be issued by the auditor, and the last, how the auditor certificate looks like, that we are going to understand. So in totality, you can say that these are the basic 18 points which we should have in mind while doing this chapter. Each and every point is highly important. Each and every point. You can't say that one point is important and one point is not important. Audit committee is a huge topic. Let's do audit committee and some selective points from the other regulations. No. The good thing in this chapter is each and every part of the chapter is important and have been asked in the examination. Clear, everyone? Yes. Shall we proceed? Chalo. So let us proceed with the legal framework of this particular chapter first. So what is the name of the chapter? Audit committee and corporate governance. So mostly in this lecture we are only going to govern the provisions relating to audit committee, and side by side I already told you I'm going to prepare notes along with you. Are you getting the point? For your ease, as you all know that I share my class notes also with the students as they find it highly important, as they find it very much easy to understand. So we are going to prepare notes from here, right? So side by side we are going to prepare the notes from here. So what is the first topic we are going to understand? The first topic we are going to understand is legal framework. Remember one thing, the material is already distributed to you all, and make sure that you are reading this particular chapter line to line with the material. So let us understand what do you mean by legal framework. So we'll understand the legal framework, we'll do some major things, we'll take out some major points which we think that which are important from the examination point of view, and we'll write it out on the right side. Clear, everyone? So let us understand what do you mean by listing agreements legal framework. Now, first thing we have to understand, what do you mean by LODR? As I already told you, LODR stands for what? Listing obligations and disclosure requirements. So what do you mean by LODR? Listing obligations and what? Disclosure requirements. Sir, what do you mean by listing obligation and disclosure requirements? These are those listing obligation and disclosure requirements which are basically applicable to the listed entities under the SEBI Act 1992. And I have already told you, LODR is nothing but the replacement of Clause 49 agreement. LODR earlier used to be known as Clause 49 agreement, but now LODR is known as, now Clause 49 is known as LODR regulation. So listing obligations and disclosure requirements. Now let us see. Listing agreement is a statutorily mandated contract between the listed entity and the stock exchanges. Now first of all, in the very beginning line only they have used, it is a statutorily mandated contract between whom and whom? Between the listed company and the stock exchange. So if you are a listed entity, you have to follow some rules and regulations under the LODR which you have to get governed with, which are being posed upon you by the stock exchanges, right? Where it is listed. So you have to follow the LODR regulations of that stock exchange where you are listed. It does not have the authority of a law behind it, right or not? Hence, on September 2, 2015, on which date? September 2, 2015. What happened? On September 2, 2015, the SEBI's Clause 49 listing agreement got replaced by what? LODR. So SEBI issued, the Securities and Exchange Board of India issued listing obligations and disclosure requirements, Regulation 2015, with the objective of streamlining and consolidating the provision of various listing agreements in operation for the different segments of the capital markets. Now let me give you one idea about this particular thing. अब सुनना इसे ध्यान से. Basically what has happened, suppose your share is listed in the NSE. Your shares are also listed in BSE. Your Indian depository receipts are listed in another platform. Your mutual funds are listed in another platform. So different stock exchanges, wherever your securities are listed, it was very much scattered earlier. Now what happened, to streamline all the various regulations and to give a common platform, to give a which platform? Common platform where all your listed securities will be taken care of. That is what do you mean by LODR. Are you getting the point or not? As so many different types of stock exchanges were there, so many different types of stock exchanges are there, that we'll understand in the later part. So many different types of stock exchanges are there. So in the different stock exchanges, your securities are listed over there. It is very much scattered. So you have a tension. I have to follow BSC LODR also. I have to follow NSE LODR also. I have to follow MCX stock exchange LODR also. I have to follow SME stock exchange LODR also. No. Now all the stock exchanges where your different securities are listed have been streamlined at one platform. That is what the basic purpose of replacing the clause 49 listing agreement with the LODR regulation. So let us read it again. Hence, on September 2, 2015, SEBI issued the listing and SEBI and Securities and Exchange Board of India introduced listing obligation and disclosure requirement regulations 2015, LODR regulation. What is the objective? Objective number 1 is streamlining and consolidating. Streamlining and consolidating the provisions of various listing agreements in operation for different segments of the capital markets. So in the different capital markets, your different products are listed. So for all the products, they have now streamlined one particular platform. That platform is known as LODR. Right? Now say for example, equity shares are listed somewhere, preference shares, equity shares LODRs are different. Equity share LODR are different. Right or not? Preference share LODR is different. Now see, equity share LODRs are different, preference share LODRs are different, debt instruments LODRs were different, units of mutual funds LODR were different. So now all are not required to be placed at the different places. All have been streamlined and consolidated at one platform. So LODR is applicable on your equity shares also, on your preference shares also, on your mutual funds also. Wherever it has been scattered, instead of following the scattered provisions, now it has been streamlined and consolidated. Now securitized debt instruments and any other securities that SEBI may specify. Now we'll understand this in a detailed manner at the later stage. So what we understood from the para number one is, first of all, LODR came when? LODR came on 2nd September 2015. Who introduced? SEBI introduced, in replacement of clause 49 listing agreement. What are the two purposes? The purposes, first purpose is, now try to understand this word, streamlining means what? Scattered things were there, let's streamline it, and consolidation of the provisions of the various listing agreements in the operations for the different segments of capital market. Are you getting the point or not? So basically it streamlined and consolidated the various provisions of the listing agreements in relation to the different segments of the capital markets. Now equity share, preference share, mutual fund, IDR, securitized debt instruments, all are consolidated at one place only. That is what is written in the point number 1. Now as I already told you, LODR is basically a replacement of what? LODR is basically a replacement of what? It is a replacement of clause 49 listing agreement. Now see, LODR regulations also capture the corporate governance principles found in clause 49 of SEBI's model listed agreement. It may be noted that LODR regulations deal with only the post listing requirements and exclude all the pre listing requirements. Sir, what do you mean by that? First of all, tell me everyone, what do you mean by listed entity? A listed entity is the one who is registered under at least one recognized stock exchange. So when you are a not listed entity, whether LODR will be applicable to you? No, it will not be applicable to you. So LODR is applicable to you when? Pre-listing or post-listing? It is applicable to when? In the post-listing. Are you getting the point or not? So when the LODR is applicable to you, LODR is applicable to you on all the post-listing regulations. It deals with all the post-listing regulations. Pre-listing regulations are not dealt in LODR. L stands for what in the LODR? Listing obligation. So after getting listed only, the things will be applicable to you. And it is a replacement of clause 49 listing agreement. That is what is given in the second paragraph. I hope all of you understood. Yes, sir, we understood. Now, LODR regulations under the regulation number 3 are applicable to whom? Unless otherwise provided, these regulations shall apply to the listed entities who has listed any of the following designated securities on recognized stock exchange. If you are a listed company, listen to me very carefully. Within 1 minute, the whole paragraph will be there inside you. If you are a listed entity and you have any of the following category of the securities listed on any recognized stock exchange, LODR is applicable to you. So point number 1, you should be a listed entity. Point number 2, your securities are also listed. And point number 3, on any of the recognized stock exchange. Now, what kind of recognized stock exchange and what kind of securities? If your securities are what in nature? Specified securities. So what do you mean by specified securities? Equity and convertibles listed on the main board. What do you mean by main board? SEBI or SME exchange or institutional trading platform. This is called as ITP. So if your securities like equity shares and your convertible instruments are listed on the main board, are listed on the SME exchange and or any institutional trading platform, then in that case LODR is applicable to you. So you are a listed company and your any of the following security is listed on a designated recognized stock exchange. Any of the designated securities is listed on a stock exchange, recognized stock exchange. What is the first security we are talking about? Your equity shares or your convertibles are listed on the main board, are listed on what? SME board, or it is listed on ITP, institutional trading platform. Or if you have non-convertible debt securities. What convertible debt securities? Non-convertible debt securities, non-convertible redeemable preference shares, non-convertible debt securities, non-convertible redeemable preference shares, perpetual debt instruments and perpetual non-cumulative preference shares. So if you have non-convertible debt instruments, if you have issued the non-convertible redeemable preference shares, if you have issued the perpetual debenture instruments, or if you have issued the perpetual non-cumulative preference shares and they are listed on any of the stock exchange, then in that case LODR is applicable to you as a listed entity. And if your IDRs, Indian depository receipts, are listed on any of the security exchange, on any of the stock exchange, if your securitized debt instruments are listed, if you have listed your security receipts, if you have listed your units issued by the mutual funds, and if any other security as specified by the board. So this is what brings an end to the introduction of this particular chapter. Are you getting the point? So now we have understood basically the legal framework of this chapter. So let us write and let us see how many points we can basically retain. Now it will create a practice also. Now let us understand how many points basically we can create, right? So let us understand one by one how many points we can retain. So point number 1. Point number 1. What is the point number 1? The point number 1 is relating to legal framework. Now everything we will put it in one framework. What is the legal framework? Point number 1. What is it known as? It is known as LODR. What is the full form of LODR? Listing obligations and disclosure requirements. LODR stands for listing obligations and disclosures requirement. Sir, point number 2. Is it mandatory? Yes, it is mandatory for listed entities. It is mandatory for which entities? Listed entities. Which listed entities? Those listed entities which have their designated securities listed on any recognized stock exchange, which have their designated securities listed on any recognized stock exchange. Sir, what are those designated securities? Securities number 1, equity and convertibles. Equity and convertibles, if they are listed on main board, if they are listed on SME stock exchanges, or if they are listed on ITP. What is ITP? Institutional Trading Platform. So if your equity shares and convertibles are listed on any of these 3 platforms, then in that case the LODR regulations are applicable to you. Clear everyone? Second one, if you have issued non-convertible, in the non-convertible there were 2 things. In the non-convertible, try to remember 2 things: non-convertible debt securities and non-convertible redeemable preference shares. Non-convertible debt securities and non-convertible redeemable preference shares. And if you have issued perpetual, what? Perpetual. In the perpetual also there were 2. What were there in the perpetual? If you have issued perpetual non-cumulative preference shares and you have issued perpetual debentures. Are you getting the point? So first one, if you have issued equity and convertibles. Second one, if you have issued non-convertible debt securities and redeemable preference shares. If you have issued perpetual non-cumulative preference shares and perpetual debentures. So trust me guys, if you will do in this way, like what I'm doing in the video right now, so remember one thing, you need not spend even a single minute at your home in revising it again after watching this video. So we are going to read it from the material and we'll try to retain it and try to write it on the right side. Are you getting the point? Yes. Next point. What is the next security? If you have any Indian depository receipts, that is called IDRs. If you have any mutual funds listed, if you have any securitized instruments, that is basically debt securitized instruments. What type of instruments? Debt securitized instruments. Or if you have any kind of securities receipts, if you have any kind of securities receipts and any other securities specified by board. Correct everyone? So if any of these designated securities, what designated? Equity convertibles, non-convertible debt and redeemable preference shares, perpetual non-cumulative preference shares and debentures, Indian depository receipt, mutual fund, securitized instruments, debt securities receipts, and any other securities specified by the board are listed on any of the recognized stock exchange, then in that case what will happen? In such cases, your listing obligation and disclosure requirements are applicable on you. So I hope all of you understood. So this is the meaning. Yes, it is mandatory. For which class of companies it is mandatory? That also I have written. Now basically, what is the purpose? What is the purpose of LODR? Tell me, what is the purpose of LODR? Two purposes. One is streamlining and one is consolidating. One is what? Streamlining and one is consolidating. Sir, what to be streamlined and what to be consolidated? The different listing agreements of different securities. The different listing agreements of different securities. The main purpose was to streamline and consolidate at one platform so that LODR can take care of everything. So if you are having now mutual funds, or if you are having now equity, preference, debt, securitized, are you in an IDR, everywhere, anywhere, LODR will be applicable. The main purpose is to streamline and consolidate. Remember this word, to streamline and consolidate. So when it came, sir, it came on which day? It came on 2nd September 2015. Issued by whom? SEBI Act 1992. Issued by whom? SEBI Act 1992. Are you getting the point? In replacement of what? In replacement of clause 49 listing agreement. Correct, everyone? So in replacement of clause 49 listing agreement. So tell me, is it looking better or not? So we understood each and everything. We understood each and everything relating to legal framework. And one more important thing, what does it cover? What does it cover? I'm telling you, you go in this chapter according to me, and I can guarantee you, you will not find it in the best way which I'm going to teach you. I'm going to make you understand each and every word in a very simplified manner. I'll make this whole chapter simplified for you. So there will be a time coming when you need not see any kind of material which is given on the left side. You have to just simply see the notes and go for the examination. Coverage. What is the coverage? The coverage is post listing. The coverage is post listing requirements. It does not cover any pre-listing requirements. That is what is written in our point number 1 or in our page number 1. So with that, the legal framework of this particular chapter, audit committee and corporate governance, is over. I hope all of you understood. Yes, sir, we understood. Now the main topic will start. Topic number 2, legal framework we understood. Now we are going to understand the audit committee. As I already told you, we have to understand audit committee from the 2 point of views. Are you getting the point? What are the 2 point of views? Some audit committee, provisions of the audit committee as per Companies Act 2013 and provisions of the audit committee as per LODR regulations. So LODR regulations we have on the left side, and the section 177 audit committee as per the Companies Act we have on the right side. So majorly what I'm going to teach you here, what I'm going to make you understand here, I will make you understand majorly the difference between the two. Sir, what kind of difference between the two? The first thing we are going to understand is whether, the first thing we have to understand is whether the LODR and whether the section 177 audit committee is basically same or not. There are some provisions which are very much same, but yes, at the same point of time, they are very much different from each other. So first of all, let's understand that audit committee as per LODR is applicable to whom, and audit committee as per section number 177 is applicable to whom. Now see, as per LODR, provisions of the audit committee and corporate governance given in the chapter 4 of LODR are applicable to all listed entities, companies that have listed equity shares, convertibles on recognized stock exchange, except the provisions given in regulation number 17 to 27 are not applicable to companies listed on SME, companies with paid up share capital, equity share capital of all these things 10 crores and net worth of 25 crores. So remember one thing, LODR LODR audit committee is applicable to whom? LODR audit committee is applicable to all the listed entities. LODR audit committee is applicable to all the listed entities, but LODR audit committee is not applicable to whom? It is not applicable to those companies which are listed on what? SME exchange, and it is also not applicable to those companies with a paid up equity share capital of less than equal to 10 crores, or the net worth is less than equals to 25 crores. It means if your paid up share capital is more than 10 crores and your net worth is more than 25 crores, then only the LODR regulations are applicable to you. This is as per what? As per SEBI Act. Are you getting the point? So applicability as per the SEBI Act is to all listed entities except two. What are the twos? Those companies which have listed their equity shares on small and medium exchange. Are you getting the point? SME exchange, and those companies whose paid up share capital is less than equals to 10 crores and net worth is less than equal to, or net worth is less than equal to and net worth is less than equal to 25 crores. Correct, everyone? So this is what brings an end to the applicability of what? Audit committee. Everyone is clear? So as per SEBI regulations LODR, this is what the applicability. Now as per section number 177, which is as per the Companies Act, what is applicability? As per the Companies Act, it is applicable to section number 177 is applicable to the listed companies. So you all know listed company is a company first. Listed company is a company first. So obviously it is applicable to all listed companies. Yes, which we have already covered under the LODR. Is it applicable to public companies? Yes, it is applicable to those public companies whose paid up share capital is greater than equal to 10 crores, whose outstanding borrowings are greater than equal to 50 crores, and whose turnover is greater than equals to 100 crores. Are you getting the point or not? Remember one thing, very simple. Remember one thing. If you are a listed company, section number 177 audit committee is automatically applicable. If you are a public company other than the listed company, it is applicable when any of the three conditions are satisfied. So what are the three conditions? Sir, paid up share capital should be greater than equal to 10 crores. Sir, outstanding borrowing should be greater than equals to 50 crores. Sir, turnover should be greater than equals to 100 crores. And if you are a private company, and if you are a which company? Private company, it is not covered at all. For the private company, section number 177 is not at all applicable. Clear everyone? Clear everyone? Okay. So once covered in the limit, it is covered for the 3 consecutive years, excluding unlisted public companies being joint ventures or wholly owned subsidiaries and dormant companies. So once you are covered, it is covered in for the 3 consecutive years. Are you getting the point or not? So listen to this very, very carefully. Suppose any of the 3 conditions are not being satisfied from the second year, third year, fourth year onwards. But are you covered from the year 1 or not? So you are covered in year 1, you are covered in year 2, you are covered in year 3 also, even if your conditions are not satisfied. So once you are covered under the section number 177 to maintain the audit committee for the next what? 3 years. I hope all of you understood. So yes, so what is the first thing we understood the difference? The first difference what we understood is the LODR applicability as per the SEBI Act and section number 177 applicability as per the Companies Act. So we are also going to do in the same way. We'll write LODR on one side and we'll write section 177 committee on one side. So we'll write LODR on one side and section 177 committee on one side. LODR applicability. What is the first point? First point is relating to applicability. It is applicable to all listed entities. It is applicable to all listed entities except to companies whose equity shares are listed on SME exchange, small and medium exchange, and those companies whose paid up share capital, equity paid up share capital is less than equal to 10 crores and whose net worth is less than equal to 25 crores. Clear? This is the applicability of LODR audit committee. Now what is the applicability of section number 177 audit committee? Section number 177 audit committee is applicable to first of all to all listed companies. Other than listed companies, it is applicable if any of the 3 conditions are satisfied. So what are the 3 conditions? Paid up share capital should be greater than equal to 10 crores or outstanding borrowings should be greater than equal to 25 crores, or sorry, not 25 crores, 50 crores, greater than equals to 50 crores, or turnover is greater than equals to 100 crores. Are you getting the point? And where we have to see all these three figures, we have to see it on last audited financial statement. So we have to see it or tested it on last audited financial statement. And you already know that once it is covered, you are covered for the 3 consecutive years. So let us see whether we have done it correctly or not. So this is what the LODR. And let me tell you one thing, outstanding borrowings, when I'm talking about the other than listed companies, outstanding borrowings means it includes borrowings, debentures, deposits, outstanding greater than equals to. So you have to put greater than equals to here. It is not only greater than, it is greater than equals to here. So let me put me here. Let me put it here. So greater than equals to 50. Clear, everyone? Yes, sir. We are clear, right? And what is written? It is to be seen where? It is to be seen as per the last audited financial statement and as per the Appointment and Qualification Directors Rules 2014, once covered in the limit covered for 3 consecutive years, excluding unlisted public companies being joint ventures and wholly owned subsidiaries and dormant companies. So if you are the unlisted public company, which is a joint venture, or you are a wholly owned subsidiary and a dormant company, then in that case, this 3 years provision is not applicable to you. So this is what do you mean by applicability of LODR as per applicability of audit committee as per LODR and applicability of audit committee as per section number 177. Right or not? So we are done with the applicability part. We are done with the which part? Applicability. So many points are there. Don't worry. I told you na. Audit committee topic is a very huge topic. So many other points are there. So are we done with the legal framework? Sir, yes. Sir, are we done with the audit committee applicability? Yes. Now we are going to understand next point. Minimum number of directors. What should be the composition of audit committee? Sir, whether it is LODR audit committee or it is a section number 177 audit committee, minimum 3 members are required on both the sides. That is common. Minimum 3 members are required on the both the sides. How many should be the non-executive directors? That is not applicable, not applicable. But there is one problem. What is the problem? Yes. Out of the total composition of the directors or the members of the audit committee, minimum 2/3 should be independent directors if it is LODR audit committee. How many minimum? 2/3 should be independent directors if it is LODR audit committee, and in case of audit committee of section number 177, there we only need majority. So let me give you the clear idea. Suppose if it is LODR and there are total 9 directors in your audit committee. Now what is the 2/3 of 9? It comes to 6. Are you getting the point? 2/3 of the 9, it comes to 6. But if it is an audit committee as per section number 177, we don't need 2/3. There are 9 members, we need majority. If you are having 5 independent directors out of 9, that is also fine. That is a major difference between LODR audit committee and this audit committee, section number 177. So you can see that how many minimum members? Sir, 3 minimum members on both the sides. Minimum non-executive directors, not applicable. Minimum independent directors, 2/3. And here, majority. Did you get the point? 2/3. And here what? Majority. Right or not? Now there is one amendment here. In case of those listed entities having outstanding special right equity shares, having outstanding superior right equity shares. Are you getting the point? Remember one thing, those listed companies having outstanding superior right equity shares, then the audit committee of those listed companies shall comprise of only independent directors, then not 2/3. Total should be independent directors. Sir, which listed companies? Those listed companies which are having outstanding superior rights equity shares. Remember one thing, outstanding superior right equity shares. In those companies, the total audit committee should be comprising all the independent directors. 2/3 is applicable to other than these listed entities. This is a small amendment. I told you now, so many amendments are there in this particular topic. So I hope we all understood. Next, listen to this very carefully. When audit committee is being incorporated in the company, whether a non-listed company or a listed company, do we want the members to be financial literate or not? Now, sir, what do you mean by financial literate? I'm not talking about the literate. Literate means only educated. I want financial education. They should know how to read and understand the financial statements. That is called financial literacy. They should have the background of finance. They should have the background of accountancy. They should have the knowledge of these two fields. So, if you are a listed entities, audit committee as per LODR, all the members of your committee should be what? Financial literate, whereas as per Companies Act, majority including chairperson should be the financial literate. So we here need all, and we need here majority including chairperson. So you can see that where more strict provisions are there in the LODR, in the Companies Act or LODR SEBI Act. SEBI Act is more stringent as compared to the majority. Now, all should be financial literate. It is fine. All should be financial literate. Now, Companies Act is saying that all are financial literate. That is enough. But SEBI Act LODR is saying that out of all financial literate people, we need one as an financial expert. So at least one should be what? Financial management or accounting expert. At least one person should be financial management and accounting expert among all the financial literate people. So there are total 9 members. All 9 members should be what? Financial literate. But among those 9, one should be what? Financial expert. Clear? Yes. Now, who is going to chair the audit committee under LODR? It is to be chaired by independent director, and independent director should be present at the AGM. That independent director who is chairing the audit committee as per LODR, it means first of all, so we understood who can chair the LODR audit committee. Who can chair the LODR audit committee? Only independent director can chair the LODR audit committee. Who can chair? Only independent director. And being a chairperson of the audit committee of a LODR of a listed company, you have to be present in the AGM. But here, the person to be financially literate, that is more than enough. The person should be which literate? Financial literate, that is more than enough. Not compulsorily to be chaired by whom? Independent director, right? Next, company secretary of the company. Company secretary of the company is going to be the secretary of the audit committee in case of listed entity. In the listed entity, the one who is working as a company secretary must also work as a secretary of this audit committee. That is not required in case of what? Companies Act. So you can see now, you can feel now how LODR audit committee is more stringent, more strict as compared to the Companies Act section number 177 audit committee. Are you getting the point or not? So let us finish off this part first and then we'll move to the next one. Now, second thing, I will ask you some points. You keep on telling me the differences. So let us write the differences. Point number one. Point number one. What is the composition we need? Point number one. What is the composition we need? Here also minimum 3 members we need. Here also minimum 3 members we need. Do we need non-executive directors? Not applicable. Not applicable. Do we need independent directors? Yes. At least 2/3 must be what? Independent directors. Here at least 2/3 of majority. Here majority should be independent director. Where majority? When it comes to Companies Act section number 177 audit committee. But I already told you that there is one amendment. So what is the amendment? If it is a listed company with outstanding superior rights equity shares, then in its audit committee, only independent directors are required. Only independent directors are required. Only independent director means what? All should be independent directors. all should be independent directors. But that is not required in case of what? Companies Act 177. Next point. Financial literacy. In the case of financial literacy, here all should be financial literate. Here all, or here majority should be financial literate. Majority should be financial literate. But among all, do we need one financial expert? So financial management and accounting expert, how many people? At least one. We need at least one here, but in case of Companies Act, not applicable. Who is going to be the secretary of the audit committee under the LODR? So secretary. So CS of the listed company will become the secretary of audit committee. The secretary of the company will become the secretary of the company. Secretary of the company will become the secretary of the audit committee. But what is the provision here? Not applicable. Are you understanding the point? Who is going to chair? Who is going to be the chairperson of audit committee as per LODR? Who is going to be the chairperson of the audit committee as per LODR? The person who is going to chair is known as independent director only, and he must be present at AGM. But there is no requirement in case of this thing. It means if you are a financial literate, you can become the chairperson of an audit committee. If you are a financial literate, you can become a chairperson of an audit committee under section 177 of Companies Act 2013. I hope now you are understanding that this chapter is very easy. The only thing is you need to understand the differences between the toughness of the LODR regulation as compared to the unlisted company under the Companies Act. Clear? Now, next one. Invitees. Who is going to be invitee? It means in the LODR audit committee, who can be present in their meetings? Finance director can be present in the meeting of audit committee. Head of finance department can be present in the audit committee. Head of internal auditor can be present in the audit committee. Statutory auditor, etc. may be invited. These people may attend the audit committee meeting of LODR, but no such provision is given under which act? Companies Act.